Hey, it's Soleil, and this is episode 553 of the Orange Pill Investor. And today I'm going to talk about gamma risk and why the Tasty Trade folks generally recommend the 45 DTE openings for your short positions, cash secured puts, and covered call positions, and why they generally try to exit those positions by 2 to 3 weeks, which would, let's see, 3 weeks would bring us down to 24 DTE. And so um, this has got kind of a double meaning. It just occurred to me as well. So I just got my laptop back, was having some problems with it. So I'm troubleshooting a whole bunch of shit, and like I'm using like the eco silent power friendly mode. I'm a gamer, so like I want the extreme mode at all times, even though I'm not gaming, I'm just streaming. And so I might be running on borrowed time. My stream got interrupted yesterday. I had to start it back over. And of course, I didn't notice it until, I don't know, I had been running my mouth for like 10 minutes, and then I realized the fucking stream had ended. So all those bangers you missed out on while I was just talking to the void. So I went ahead and changed the driver from the gamer driver to the creator driver, the NVIDIA driver. And I guess I'm just going to hope I'm having better luck with that. But the real meaning of the video is this like worked out exactly perfectly um, for my covered call strike, but also for the intent of this video. So I had to cover it today. So I've got two positions here. I've got, is that too big? I've got the pretty aggressive for premium, that is. This the price of strategy last week was like 165 maybe. And so getting $2.36 times 100, so 236 bucks on a $17,000 position is like one and a half, no, maybe about 1.25% of a guaranteed return, with about, what was it, like seven, somewhere between like $7 to $10 of call away value between the 165 and the 172. So this is pretty aggressive. If strategy had run to 200, I would have gotten completely destroyed here. There's really no rhyme or reason for the strikes that I picked, other than it was within the expected move. So this is just blind luck. But the point is that it's still got $100 worth of extrinsic value, and there's only 2 hours and 10 minutes left in the trading day. So almost 50% of this entire position is still decaying with 2 hours left. This has been on for 7 days. So half of it took 7 days to decay. The other half is taking the last 2 hours. And so you can even see that the net theta here is 500 for these five positions, which makes sense. 110 an hour for each of the five positions, and there's $120 worth of extrinsic value here. So all extrinsic value has to decay completely by 3:59 and 59 seconds today. And so what this means is, since this is in the money, and even though it's only a nickel in the money, gamma is 1. Well, there's still two hours left, so it's like 0.99 probably. But right at 1 second before close, gamma will basically be as close to 1 as it can be, and might as well just be 1. And if this flips to 172.51, it's in the money, then gamma is going to be 1, and the price of the option will move dollar for dollar with the underlying share price. If this trades down to 172.49, now it's out of the money, and gamma flips from 1 to 0. And the value of this option becomes 0, and it just stays 0. So anywhere from strategy's price of 172.49 down to 0, like if it plummeted to 0, then this option would be expire worthless. And so this is what gamma risk means: is at or near expiration, gamma starts to approach 1 if it's in the money. And it can really only be operating in two modes, 0 and 1. So when something has, I don't think I even have gamma in my, I don't really trade around gamma, so I don't put it in my columns. Let's check out. It's in here by default for strategy. So when I go out 42 days to expiration, sell call. Let's go out of the money. So gamma is like 0.008. This is the rate at which delta will be changing. And so if Stretchy's price goes from 172 to 173, it's gone up $1, which means this option will go up by 30 cents because of delta, but then delta will change by this number. So the 0.03, let's just call this 0.031. Let's round it to 0.031. We'll add the 0.0088 to it, and delta would change to 0.03188. And then another dollar goes up. The option price would go up by delta plus whatever gamma is. And, you know, gamma is going to be changing based on whatever that Greek is. I can't even remember. I think Vega is implied vol, so it's whatever. It's some other freaking number. But I don't even pay attention to gamma for the most part, let alone paying attention to the Greek that regulates gamma. I really don't care. But you do want to understand at least the mechanics of how these things work. So if you cannot handle this risk, meaning if strategy were to just go vertical, blow past $200 a share and, you know, oh, happy day. Well, in order for me to not let my shares get called away, if it went to 225, that would be what, $5,000 a pop? $25,000 not to lose my shares, and I only collected $200 up front. So these weeklies, while you can collect a bunch of premium here, it's nothing compared to if strategy really just rolls. And another thing to point out here too is when I'm saying, okay, I'm guaranteed 1.25% return on capital because I'm collecting $236 on a $17,000 position, $172 a share times 100. This is just the theoretical profit. But obviously, if I try to roll this now, I've actually got to buy this back for half of what I sold it for. So am I really collecting 1.25% that week? Not really. I'm only collecting half of that. So whatever, half of 3/4, so 3/8. No, sorry, half of 1.25. So half of 5/4. So 5/8. 5/8 of a percent is what I would actually collect here. If strategy was trading at 165, I would be basically buying this back for a penny. So I would collect that full amount. But just keep in mind there's a little bit of friction here. There's a little bit of friction in the bid-ask spread. There's going to be some friction based on what it's going to cost you to roll it to the next week or to the next position. And you have to have realistic expectations that even though you're selling this for this amount and the extrinsic value has to go to 0 by expiration, there could be some intrinsic value that you would have to pay for, and that intrinsic value could just dwarf this completely. And that's basically what gamma risk is. Sometimes when people say you're picking up pennies in front of a steamroller, they mean that the price of the stock can go way down and then you're just kind of assed out and you're left bag holding. But it also could mean you're picking up pennies in front of a steamroller when the price goes up to 225 or whatever. And now you've collected, if that happens the very first time you try it, you collected $200, but you missed out on $5,000 worth of price appreciation. So it really kind of just depends on what do you do with this $200. and, you know, what your risk tolerance is for the price going way up or the price going way down. I think that's everything that I wanted to say about that. Okay, Vanna. Thank you. Is it Vanna or Vanna? Vanna White. Thanks, Kevin. I think I think Ryan had a post, an old post about Vanna, that it was potentially an important um, Greek for companies like Strategy. I know he was paying attention to Vega because there's a weird phenomenon with Strategy and potentially other Bitcoin derivative companies. I'm not sure, but a lot of times the implied vol on a stock will spike when the price of the stock goes way down, which is good when you're selling cash secured puts and to a certain extent covered calls, but you kind of get wrecked on your covered call position because your underlying that you bought has cratered in price. So, and then you also put yourself at risk for selling a covered call below your cost basis and, potentially getting whipsawed if there's a rally and you end up selling that covered call at the bottom or something. So there's some risk there. But there's a phenomenon that Strategy has displayed in the past where implied vol can actually rocket up when the price increases. We saw that in November 2024 when Strategy was, hit $500 a share, and implied vol was like, the rank was over 100 because it was the highest implied vol for the last 52 weeks. So in that sense, if you're not selling covered calls and you're just waiting for that to happen, you can capture the price appreciation on the stock, and then you can just hammer covered calls on top of it, get paid a bunch of premium, and benefit from higher underlying prices plus an increase in implied vol, which is going to be tied to Vega. All right. So with all that being said, what am I going to do with these positions? I'm kind of keeping an eye on earnings. So earnings for Strategy saying February 5th. I think that's accurate. And I've already rolled out my 45 DTEs to February 20th. So potentially I may just take these off on the 5th. Is it aftermarket close or is it? I think it's after the bell. Yeah, they usually do aftermarket close. So, potentially I may just close all of these positions. I try not to have covered calls on for stocks over earnings just in case the price gaps up. Um, as long as I've been doing this the last year and a half over for Strategy, it's never worked because the market doesn't really seem to care about Strategy's earnings calls so far. Um, I guess if they had some amazing announcement or something, it could matter. Maybe if they announce an 84 plan, which sounds ridiculous, but it's shit. Hell, they could probably blow through their 42 plan this year. I mean, if the new year is any indication, they could blow through 5 billion of stretch ATM. If anything good happens with Bitcoin and they start being able to ATM the other preferreds, that's just a little bit of extra cream on the top. Plus, I think they ATM'd the common 10 to 1, 10x the stretch ATM, which I wouldn't expect them to do that every single week. But that would be uh, I don't know, 55 billion worth of Bitcoin purchases for the year. So that would be kind of sick. I'm not I'm not making that a prediction. I'm just thinking like, okay, bull case, they buy $55 billion worth of freaking Bitcoin if everything worked out well. And hell, I mean, Stretch could even get more liquid if they have a hard time keeping it under 100. Maybe they start plowing through 200 million a week. Hell if I know. Um, when a stock goes to all-time highs, it gets into price discovery, and we just have no idea. We're in price discovery mode for Stretch right now. Like, not how high can the price go? It's definitely not going to go over 101. And now that I say that, it would be hilarious if people were still bidding it up to like 102, and Strategy couldn't hammer the ATM fast enough to keep it down, and they had to like lower the interest rate just to keep it in check. I kind of expected that to have happened right away, but the market was still apparently the market was not as bullish as I was, which makes sense. Take some time to earn trust. Um, so this worked out like literally almost perfectly. It was a wild ass guess, but it's expiring almost right at the money. So I could let me share without volume. Let me just go ahead and close them all. And let me just close. Should I close or roll? Let me just take a look at it. If I roll to next week, and I could roll out to the expected move for a small credit. Or roll out to 185 for an even smaller credit and give myself a little bit more breathing room. Or I could just capture a little bit less guaranteed premium. Like I've got 1,100 shares. I don't have to cover them all. I'm generally pretty comfortable with the risk, with the upside risk. But at the same time, what's up, Voyager? Grats winning the ticket lottery like a dog. Hope to see you out there. Um, yeah, I kind of feel like I got away with one. I was pretty aggressive with that. So let me just do 3 of these for now. And let me think about this. And then I'll just close these. That's probably going to amount to a break even because I rolled these for a credit. And if I close these, that should basically be a wash. And since I know I'm not going to carry these over February 5th anyway. What's Bitcoin doing? Bitcoin, we got some nice higher highs and higher lows. You'll love to see it. But, in the grand scheme of things, it's not like it's hilarious when people say, "Oh, Bitcoin is rocketing up $1,000 today." And I'm like, really? Those aren't the kind of rockets that get me excited at this point. But that's how you know you're becoming dead to the price is I don't know. You start to feel a little dead inside. The moves don't even get you all of that excited. And we're a pretty hard to impress group. I think Sailor said it best on Danny Knowles' episode when we're like, "Oh, Bitcoin was kind of disappointing for 2025, and it's like, well, we had an all-time high in October, so we're like 3 months off all-time highs, and it's just that the 125 wasn't like, it just wasn't euphoria. So nobody even really like kind of cared. It's like 125 was just supposed to be the stepping stone to 150 or 175. I think people would have been like, cool, if the cycle's over, it's over, and it's all good. But this was just, Bitcoiners are just hard to impress. Maybe we're more bearish than we think we are, or maybe it's the other way. Maybe we're too bullish. Hyper bulls. Number go up only. All right, so I'll come back to that, or maybe I will. I could do two. Actually, I already picked the expected move, right? Yeah, I sold the 185s, which is still like more than 1% return on capital. I could go to 1% at right about here. I could sell the 187.50s and give myself even a little bit more breathing room. Yeah. Yeah, unfortunately, I've still got about 40 grand worth of margin I need to chip away at. Yeah, I'm just going to go for it. No fill. I would like to get a fill, please. I don't know who's being greedy, or me or the market makers, trying to squeeze pennies out of each other. All right, so this position's fully covered now, and nothing really to do except, oh, and that's hilarious. So my weekly strike and my 35 DTE strike are the same. So I could completely get wrecked on these positions. It's going to be interesting to see what it's going to cost me to close this in 15 days before earnings call. All right, I sold this cash secured put. Kind of, I wouldn't mind putting another one on, but can't bring myself to do it with as much margin use as I have. Oh yeah, got a couple more cash secured puts here as well. Pretty close to being ready to roll, but not quite under 310. So I'll kick the can down the road on that one. Same here. 28 days left. The price is going on the underlying is going up. So this is not ready to roll. Same here, not ready to roll. And same Z's. So the dollar amount is not ready to roll. However, anything under, 20, 25 days is starting to get gamma risk. However, if I'm going to be, so this would be like the perfect time to roll. So do I roll it now, or do I just wait and close this on the 5th? Let's see what would happen if I roll this now to the 200. I collect a small credit, and then I would just have to turn around and potentially close this. Well, actually, you know what? I generally don't close my covered calls on Poorman's covered call because that's kind of their whole purpose. And if the price gaps up and I end up having to close the entire position, I generally don't care. So I kind of like this. I'm just going to roll this to the 200, and I probably won't close it on the 5th. All right, yeah, I like that. I like the mechanics on that one. And I didn't double check, and I should have, but I ended up picking the exact correct strike by accident. The lowest strike that you generally want to select, and I go by this formula on Blue Collar Investor right here. And so on a poor man's covered call, you really shouldn't be selling below the value of the long strike plus its value. Technically, if you follow the formula exactly, you can also subtract the premium that you're collecting. So, 125 and 75 gets you to the 200 strike, which is what I picked. I could have dropped it to the 195 strike because I could subtract this from the 200 as well. But the expected move usually hits it pretty closely, so I kind of got lucky there. What do I already have? I have PMCC and PMCC2, so this one will be PMCC3. Yeah. Yeah, I won't be closing any of the covered calls on the poor man's covered calls for earnings. I just do that for my shares because if the price gaps up, I like when it runs up and it gives me an excuse to exit these leveraged positions. All right, that should cover it. I don't have anything else that's like too short of a date that I need to roll now. I can kick the can down the road. All right, strategy's done. Tesla, it's not under half of what I sold it for, and it's not in like that mandatory roll zone under 21 DTE. So I'll give this another week. I've been trying to stack some leveraged long positions as well, but nothing else to do here. This has been on for 11 days. It's not less than half of what I sold it for, and it's not in like the mandatory roll zone under 25 to 20-ish. So I will do nothing there as well. All right, the IRA. And I really got to figure out if I can do the backdoor Roth somehow. I guess I would just pay the taxes, right? Probably should have done that last year since I probably tax loss harvested like a motherfucker. Um, probably should have attempted that last year. That's annoying. Thought about it a little too late. All right, so my covered calls for iron getting destroyed. So that's a good thing. However, let's just see, should I exit this position early or should I just, let it continue to decay? When a covered call position goes in the money, you calculate its extrinsic value by subtracting the intrinsic value. So to calculate the intrinsic value, you subtract the strike from the current price. That is, we might as well just call this 58. So that's $10. If I subtract that $10 from the 1285, that's 285, meaning there's $2.85 of extrinsic value here that I can collect, meaning it will cost me, if I wait to expiration, it will cost me $285 less to roll this or to close it than it would today. And so I could just close both of these positions now if 285 bucks wasn't enough to capture. And I generally estimate that I'll collect about 1/5 per week of that value. So that would be about what, $57 a week on a, this is sitting on about a $5,000 position. So that's about 1% a week. That's not terrible. So even though this position is getting kind of destroyed, there's enough extrinsic value in here for me to just sit on it. But if I'd run this calculation and we're like, if the price is still 58, but there's only $10 left, then there's no extrinsic value for me to collect. And it would make sense to just exit that position or just bite the bullet. If you don't want to lose the shares, just, pay whatever it costs you to roll it out. Tesla, it's decaying slightly. It's only been on for 9 days. Again, I'm trying to stack some long positions here. I have like no buying power, which is intentional. The strategy covered calls. I really like trading in the IRA because I don't have to worry about taxes. But since there's no margin available, I can't just close these on the 5th and like, okay, I have to have that, $700 worth of buying power to close it. So I would have to potentially close another position to afford to close this. So maybe that would be the motivation to close IREN, not because I care about IREN, but if I need the buying power to do something, to keep my strategy shares or to manipulate my covered calls. That's kind of what I use the miners for. Is like if strategy gaps up and I don't want to lose my shares, okay, what's it going to cost me? I'll just exit some of these mining stock positions. The other dry powder that I keep are like the 1080s, poor man's covered calls. I could always close one of these positions to pay to protect my 100 shares. So long story short, it's not ready to roll. And neither is my poor man's covered call. So don't need to take any actions in the IRA. My allowance account. I'm selling cash secured puts in Cypher to generate premium, and I'm using those positions to take long leveraged positions in Tesla and strategy. Hopefully this will work out better this year than it did in 2025. And then since the margin calculation is not really counting that against me, I'm taking a bunch of cash and just buying as many preferred shares as the algorithm will let me. But these were just rolled out, so they're not ready to roll again. I wonder if I could buy another share. Yeah, I'll leave it there. This is probably leveraged enough for an account this size. A small account, that is. All right, this will be interesting. I sold the 18 covered calls, and the price is 1888. So upside down on this, I got paid 64, but if I want to not lose my shares, it's going to cost me $1. If I roll it, even to like a pretty aggressive, I could roll it for a break even, basically, if I roll it to the 19 for next week. So, yeah, let's give that a shot. Debit. This is so. What about my buying power? Like $150? Yeah. I also have this CLSK put that I sold for February 20th. I'm tempted to just blow up most of this and run a and run a strategy poor man's covered call. That would be pretty much like saying, yeah, this is the bottom. The bottom is in, and it's time to go leverage strategy time. That's probably irresponsible on an account this size. It would probably account for like 80 to 90% of the value, and I would have to dump all of the cipher position, um, the CLSK put. Actually, yeah, I can't do that. I'm copy trading these two positions with my brother-in-law, and that's already accounting for $2,900. So yeah, never mind. That's off the table. The CLSK put, what did I sell this for? 96. So this is pretty close to rolling. Anything under 48 is like the perfect time to roll. And I could roll it up to the 12 for a little bit of a credit as well. But there's so much time left on this. It's really not any type of rush. Now, what did I do with my Strive? So I'm going to look at my trade history here. I generally do not like to bag hold. However, when a stock is so cheap, it's very difficult to squeeze premium when the price tanks. So I sold, when the price, I was bag holding basically, and the price pumped up to like $1 a share or whatever. And so I went ahead and sold the covered calls at the one strike, collected, 7 cents per contract, and then got lucky, and those actually expired worthless, and I was able to keep the whole dollar amount. And I'll probably just do that. I'll just bag hold on the Strive shares. And oh, you know what? Whenever the reverse 20 kicks in, I'll be priced out of this. So I don't remember when that's going to happen. So maybe I just sell them anyway. My 200 shares would get reduced down to what? 10? 10 shares? So I can either bag hold my 10 shares. I've got some exposure in my wife's account to the tune of about 1,000 shares. So that's not the end of the world. But if they pump the price up to, on a reverse stock split to $20 a share, it's going to make collecting premium a hell of a lot easier. But in an account that's only worth 6 grand, it's probably cost prohibitive to own it. However, at that point, I could just dump my cipher because they would be about the same price. So I could stop running the wheel on cipher and just switch over to Strive. That would be kind of fun. That would be kind of fun to do. So I'll keep that in mind. Maybe once the reverse split kicks in, I'll buy 80 shares of Strive, dump my cipher position because I already have a wheel cipher position with my brother-in-law's account, and I can just keep exposure to that and keep demonstrating the wheel on cipher, and it'll be a little bit fun to cover Strive and throw a little bit of support behind Jeff Ben and now Dan O. Might have to rename Strive True North. Maybe they should just hire the rest of us and we'll just fucking run the whole thing. Um, just kidding. Yeah, that seems like a plan. I'll dump this cipher position when the reverse stock split kicks in. I've only got what $150 worth of dry powder. I What's stretch trading at? It's still holding up, right? Didn't really even tank after the dividend paid out, which really should be the case. So in most dividend stocks, the price of the stock tanks by the dividend because you're paying out cash from the stock itself. But Strategy is not paying a dividend from STRC. It's being paid from the common. So if anything, when Stretch pays its dividend, the common should tank. So what did Strategy do? Like Strategy should only tank by 1% of Stretch's price, which would be like $1 a share. So, like, what did MSTR do on the 15th? Opened at 172, and yeah, it kind of went down. Went down a couple dollars per share. But I mean, the market's doing shit anyway. So I can't really say, oh, yeah, Strategy tanked by $1. Like, $1 of this was paying the Stretch dividend. Like, is the market really that inelastic that the market punished Strategy's price by the Stretch dividend? I I can't imagine that's the case. It was probably just going down anyway. What was Bitcoin doing yesterday on the 15th? 15th. Yeah, so basically Bitcoin was kind of trending down anyway. So Strategy was just probably just following Bitcoin's move. But the whole point is that I don't think that preferreds should be acting the same way that a regular dividend stock does. So if Microsoft or Apple or any of these people pay a dividend, their price should tank based on the dividend that's paid out. But I don't think STRC should behave that way because it's the preferred itself is not losing anything. So there's no reason to penalize the price of the stock by the dividend that's paid out because it's basically paid out by a completely different entity. But that's all conjecture on my part. All right, what's Tesla trading at? Tesla's trying to piss me off. Been doing the best I can with these put credit spreads. It's a bullish short position. And I've also got this one debit spread. This is coming back to life. What did I pay for this thing? Oh, so this is actually not too bad. Unfortunately, the bid-ask spread is wide as fuck. So even if I tried to collect this profit, I bet you I wouldn't get filled for more than like 150. So you have to be careful with illiquid option prices. You think you've won and you can't really exit and you get screwed trying to close the position. So hopefully Strategy will do some good things between now and whatever, March to June. Same deal here, just some like tiny attack the tail positions. Um, on an account that's worth 5 or 6 grand, having $200, $300 worth of attack the tail is not terrible. I think going as high as 10% would probably still be pretty reasonable. Really, whatever premiums you can, if you want to plow all the premiums into these long positions, I wouldn't argue with it. with a small account, you can grow at the slow way. And I do like one of my favorite quotes from a blackjack professional blackjack player was, "I'd rather get rich slowly than poor quickly." I think it was more like, "I'd rather make money slowly than lose it quickly," something along those lines. But, you know, positions like this have the potential to double. Position like this has the potential to like 15x. Same with this one. I think I paid like $17, and the max win is the difference between 2 and 5, which is $300. So, potential 15x here. Granted, we're talking, very small amounts of money, but on an account that's 6 grand, turning $20 into $300 is a huge win. Yeah, I think that's it. Dude Face, what's up, Soleil? Love the True North call this week. So much insight. Appreciate it, man. The the day the day nobody can watch it and be like, there was some insight, is the day we need to close up shop. What's up, Speed? Stretch bounced right back and SATA rising now too. Maturity happening, TradFi, mouth breathers paying attention. Yeah, I love what's been happening with SATA. And for any people that are new that are watching the stream, you have to discount anything that I say with a grain of salt, because True North got purchased by Strive, and SATA is Strive's preferred stock. We are still working on finalizing the independent contractors um, contracts, and I suppose that we will be paid whatever the going rate is for, whatever, YouTubers, when you pay somebody to show up. I've been assured that, you know, other than like literally saying something illegal or like calls for violence, that we should be able to say whatever we want on the calls, and not suffer any type of repercussions. So it'll be fun to test that theory, see what I can get, see what kind of shit talking I can get away with. But but yeah, if that worries you that I have an affiliation, but yeah, I'm loving that that SATA has been trending towards par. They dipped into the. I'm just waiting for the Strive.com. Strive. I don't know. Is that their website? Here we go. Credit. Okay, so they're still stuck at 201.27 million. I'm waiting for this to go up because, I mean, I really wish I had some insider trading. I could, I get knowledge I could take action on. Unfortunately, it's hard to come by. Too many scrupulous uh, people running around here, but they ATM'd this at some point. So when SATA hit, like, I'm surprised they did it, because I think it hit like 95. I think they must have done it here because it wasn't above 95. The only time they could have done it would have been here or here. It might have been here. Anyway, you guys could uh, dig, uh, dig through the 8Ks. When I asked Grok about it had a hard time finding it. I think the SEC's website was like down while I was trying to do my search, so that might have had something to do with it. But or maybe I just need to try another AI. But it was probably right here. Yeah, they probably wouldn't have ATM that shit immediately. So they probably did it here. Um, Snatched a cool mill. They could have done it here, I suppose. Actually, it probably was here. But I'm watching this. I'm like, okay, if you ATM'd, maybe they were just giddy and like, let's see what happens when we when we press the button. And so they went ahead and sold, $1 million worth of SATA ATM, and I believe bought some Bitcoin with it. And so I'm kind of like eagerly anticipating this number go up, like when NGU. Come on, man. Um, yeah, it's hard to believe that they ATM'd at 95, but didn't ATM any at 96, 97, 98, 99. But I cannot imagine a situation if they don't, if they hit, there's got to be people popping popcorn waiting for this to hit 100. The fucking ATM is, the button is just, somebody's finger is hovering over the ATM button. It's got to be. There's no way that they're just not sweating fucking bullets, just staring at this number, waiting for that shit to happen. I wonder if they do it like nuclear launch codes, like they have two people with their hand on two different keys at the same time, and they have to turn on the ATM in unison or something with a fucking cryptographic password. Holiday weekend. Is it a holiday? What's the holiday? Is it MLK? Is the market closed Monday? We got a 3-day weekend? What's happening? Yeah, I can figure this out. SPY. SPY's got daily expirations. So yeah, um, 17, 18. Yeah, so the market must be closed on Monday because this is Tuesday. Violence against the fiat system. Exactly. Thank you for confirming. So stretch back to 99.99. Amazing product. Yeah, it's gonna be interesting because everybody knows strategy is the clear winner, but Strive doesn't have any convertible bonds. And I can't remember if Saylor himself referred to convertible bonds as toxic debt, or if that came from someone else. But Strive doesn't have any. So if Stretch is the iPhone moment, like maybe SATA is Android. I don't know. There's room for more than one. And who did the I think it was Adam Livingston did a pretty good he did a really good post on, I'll just call them the big three, I guess: Strategy, Strive, and Metaplanet. And I think he actually liked Metaplanet because of the unique situation in Japan where the debasement trade is actually even more appealing because the yen is fucked. So if you can borrow the shittiest money and then execute the speculative attack on the dollar or the yen in their case, that like Metaplanet is just clear for takeoff. And so between those three, each of them have their own advantages. I guess Metaplanet's got the advantage of the yen being the best money to borrow, um, like paying back yen, like and I think they were even able to get away with only paying like 5 or 6% on their preferreds. It's kind of ridiculous. Um, but then Strive is positioned well with no convertible bonds, and then of course Strategy, their convertible bonds will roll off, and just like nobody's coming close to anything that they can do. And they're able to, because they're a bigger player, pay a little bit less interest than Strive is able to get away with. And of course, there's going to be way more confidence in a strategy product than anyone else. But the other cool thing would be like, so right now, my main account is I don't know if I would strictly call it a pairs trade, because in the strict sense of the word, I think you either want to choose two tickers that are positively correlated, and then when you notice that one is running up, you can rebalance and you can sell the one that ran up to buy the other one, assuming that they will converge again. Or you could have a pairs trade with two stocks that are um, inversely correlated, and then you would be long one and short the other, and you could kind of rebalance that way. But I'm kind of using Tesla and strategy, just assuming that even though they both hold Bitcoin, Tesla's price is not really, nobody like gives a shit about Bitcoin's price with respect to Tesla. It's like, okay, did you sell all your cars? Did you make any progress with full self-driving? Did you expand the geofenced area for Cybercab? Can Optimus, you know, can have you figured out the Optimus dexterity to the point where they can give a hand job at this point? You know, like that's going to be huge news. Um, if Tesla's price just rockets up at any particular moment, you'll know that Optimus has arrived, literally. And there's so it's like these should be uncorrelated positions, strategy and Tesla. So it's I don't know if it qualifies as a strictly legit pairs trade, but when one moons and the other one is lagging, I will try to rebalance. They kind of move together though, unfortunately, because they both just trade like, like tech stocks. And if the whole market is pumping, generally these two pump together. But let's just take a look at the charts. There have been a couple of moments like, well, if I go all the way back to November 2024, when strategy mooned, I think Tesla was still, yeah, unfortunately, Tesla was kind of like pumping at the same, no, that's 2025. What, can I not get? Maybe this is too granular for me to go back that far. I might have to change the candles. Oh yeah, I've got 1 hour candles here. Let's do weeklies. Dailies would have probably done it just fine, but November 2024. Yeah, see, unfortunately, when strategy mooned, Tesla was also getting kind of expensive. So it really wouldn't have done me any good to try to rotate from strategy to Tesla, except that when Tesla crashed by 50%, it rebounded, whereas strategy, I think, kept tanking. Yeah, here we go. Kinda. We also got a rebound in July for strategy. So there was kind of two bites at the apple. I could have saved myself some pain if I had taken profits in either of these, at either of these points. I didn't bother to do it either way. Hmm. Do daily chart. I think hourly candles is a little too much. Yeah. So July when strategy pumped again, I could have taken some of those profits and rolled into Tesla, and that would have worked out great. But I didn't. So I can definitely optimize that part. But anyway, the whole point of mentioning that is, could like a strategy strive meta planet, um, not even a pairs trade, triple trade, be a kind of cool rebalancing? I've been trying to formulate a long term portfolio similar to what this guy, I think it's Chris Cole with Artemis. I heard about it from Jeff and Ryan that he's got one he calls the Dragon portfolio, and it's like 40% gold, um, whatever. It's got five different parts in it, and yeah, it was like 40% gold, maybe 20%, 10 to 20% bonds. Well, that's already to 60%, and then the other 40 was like some combination of stocks and long vol, and I don't think there was any short vol in there at all. He was not a fan of any of anything that I do. But I wanted, supposedly he back tested it like 100 years and it did well even in like stock market crashes. And I think the easy way to convert that portfolio would just be to replace the 40% gold with 40% Bitcoin. I think that's easy peasy. And then you could probably just plug and play the rest. But I wouldn't own any bonds either. I guess, you know what? Actually, now that I think about it, Stretch and Seda would satisfy the bond and would be better than any bond that has ever existed, I would assume. So 40% Bitcoin, 10 to 20% preferred of choice, and then another 40%, you know, Tesla strategy, some miners if you give a shit. Um, whatever, Metaplanet. And then I can't remember. I gotta go back and look, but I would probably call it like, instead of the dragon portfolio, call it like the orange dragon, call it like the Bitcoin dragon or something. Squad goals. Oh, did we hit 100? Damn it, I missed it. Pretty sweet. We're making history. Leverage debasement trade, exactly. All right. We're all set. I'm happy I just made it through the whole friggin' stream without my fucking laptop shutting down on me. So maybe I've got this figured out. I upgraded my driver to the Creator NVIDIA driver, and it does piss me off that I have this set to. I don't think there's anything I shouldn't be showing on here, but I went to, what is it, features. This kind of pissed me off that I had to set it to eco mode. I'm like, come on, man. I'm a gamer. Like, I want overclocked performance, but I was terrified that my fucking live stream would shut down. So maybe I'll do a test run and see. Let me see what my monitor. Yeah, my temperatures are good. So there's no reason why I should have this thing freezing up on me. And I really treated myself to an expensive machine too. So to have my new machine giving me more problems than my old machine that I was replacing because it was giving me problems is a pain in the ass. Kind of pisses me off a little bit. All right. Have a good holiday weekend yourselves. Go touch grass or get shit faced